Alphabet stock, or Google, or as I like to sometimes call it, the Goog, is getting hit a little bit along with other mega cap tech companies and the S&P 500 as a whole recently, not to mention the QQQ, but this could be creating some value opportunities. Is Alphabet undervalued today? I don't know necessarily about undervalued, but this could be a buying opportunity if you've been looking for a place to add this name, but you've felt the valuation was a little stretched recently. Google Alphabet does exactly the thing people want to see in terms of growing their top line. Up and to the right is the trend. And this is the trend over years and years. While there is a sort of cyclical nature to some of their revenue, which comes from ads, it's still overall, in the long run, moving in the correct direction. They are the owner of the two largest search engines in the world, that being Google Search, which has become a verb. You Google it, you don't internet search it, you don't Yahoo it, you don't Ask Jeeves it, and YouTube itself, where you're probably watching this video right now. Yes, when you own the two biggest search engines in the world, you do have a bit of a moat, I would say. They also seem to have somewhat adopted what I call the Apple model of just consistently buying back a little bit of shares basically every quarter, just here and there, almost regardless of, it looks like, the share price, because there's definitely been times where the share price was a lot higher or a lot lower, and it doesn't seem that that really affects the pace at which they do buybacks. It seems like they do them because they are confident, perhaps, that over the long term, that the underlying business is worth more than whatever the price might be today. And that could pan out. I'd be more interested in seeing them be a little bit more strategic about the timing of the buybacks. But if you think that the business is a value in the long term, who cares if they buy back the shares at 150 versus 170? At the end of the day, that's not going to be a huge deal if the company is going to be worth 200 or 220 a share in a couple of years. So recently, their net income has really started to accelerate. However, their free cash flow is a little bit depressed in comparison. And this is partly because I've looked over some of their financials and their capex has gone up. So that'll cause a bit of a divergence between net income and free cash flow. However, I think the thing to focus on is, do we think that the management team here at Alphabet will make good use of those capital expenditures in order to grow cash flows into the future? I think so far, over the time they've existed, this company has had a pretty good track record in that area. So I think in the very, very long run, we won't mind if they spent 12 or 13 billion on capex if it means that they expand other revenue streams that are highly profitable. And while we're at it, the balance sheet is a thing of true beauty. Yes, they did used to have a war chest over $100 billion of cash and equivalents. It's gone down to about 75 billion, but like I mentioned before, they've had some capital expenditures lately, and they have done some buybacks. Those things possibly eat into the cash reserves a little bit, but still, a healthy net cash position of over $75 billion, meaning they could pay off all their long-term debt and still have $75 billion in the bank, sitting there, earning interest, or just for a rainy day, or ready to deploy on any new opportunities to expand the business or to do buybacks, pay a special dividend, whatever your little hearts can imagine that you might do with this much cash. So with this, I think it really de-risks the investment from a certain perspective. They aren't going to have any kind of interest rate risk, really, with regards to what the Fed is or isn't doing. Sure, they might suffer a little bit if there's a weak consumer, demand for ads goes down for a while, but this isn't something where you're really facing an insolvency risk anytime in the near future. Analysts, unsurprisingly, generally rate this as a buy with high targets as high as 240. I think that might be a little ambitious, but yeah, certainly like the high hundreds to low 200s, you could figure out a reasonable way to get there, perhaps. Now the low of 129, I think, is a little bit pessimistic if you're calling that the value of the business today or where you think it's going in the next 12 months. Now, perhaps a sustained recession of some kind. Yeah, we could see a surprising price drop. It's happened before, could happen again. But I don't think that the business is worth only $129. I do think that is a little too cheap. And as usual, I think the truth lies probably somewhere in the middle there. So with regards to a lot of the valuation metrics, we have a PE of 24, which, compared to the general market is a little bit higher than what the average stock goes for, but this is a higher than average quality business with a moat and more growth than a lot of other businesses have. So generally speaking, yes, it's going to command a higher valuation. So that's not a surprise, but some people do like to get things cheap. Now, the price to free cash flow, like I mentioned earlier, that looks a little uglier just because recent quarters I've seen a little bit of a spike in the capex. I don't think that's anything to really worry about because the price to operating cash flow is sitting there at about a 20. That's what the free cash flow would be if not for the capex, basically. And if you remember my Amazon video, if you would watch that, they were sitting at around I think it was a 19 price to operating cash flow. So very similar valuation by the market on both of them in terms of their operating cash flow. Amazon, it's not really the difference in the valuation on the operating cash flow that makes me more likely to buy shares of Amazon. It's more that there are certain aspects of the Amazon business I just have a better grasp on personally due to my own background than I do with certain aspects of Google's business, but they're probably pretty comparable in terms of the opportunity. In my general opinion, that's just my sense of things. And when I run Google Stock through a DCF model, we started with just the trailing 12 months of EPS. You could maybe go out to maybe like next year's projected if you wanted to, just to see what number that gives you if you're trying to come up with maybe like a 12-month forecast. But forecasts on stock are sort of like the weather. The further into the future you go out, the harder it is to be accurate. So I'm just keeping it super simple on this and starting with the trailing 12 months of earnings, assuming that we grow from there kind of the way they have, and giving them credit for the massive amount of cash that they have on their books. We'll look at maybe like a 12.5% CAGR, slowing down maybe to an upper-ish single digit over time. And yeah, you end up with something that's in the range of recent prices. So is this stock undervalued? I think you can play with these numbers. You can sort of argue, is it worth 160 or is it worth 180? Is it worth as much as 200? Is it worth as little as 150? But I think ultimately it's falling really close to that range where I think it fits the axiom of probably a great business at a fair price or very close to it. I don't know. It's probably not perfectly efficiently priced. There's very rarely anything that's perfectly efficiently priced, but it may be slightly undervalued depending on how you look at it, or slightly overvalued depending on how you look at it. And only time will tell who is actually correct on that one. If you do happen to have Google Stock and you like it better than Amazon, let me know in the comments and tell me what a fool I am for going with Amazon instead. Also, join the Discord, link in the description. Subscribe for more videos, like For the Algorithm. Catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live. Follow me on X/Twitter. This is the most important thing you can do to help me out. That is at Mr. Macho Mog, link in the description there as well. Have a wonderful day, everybody.